It's all about the earnings, Jeff. Good morning. So from our perspective, the key is finding companies that can grow consistently over time. That doesn't sound very revolutionary, but it's amazing how difficult that is to do. But if you can find them, we still think they're very valuable. So if we go back to our portfolio last year, in a pandemic year, the earnings for the total portfolio came in about flat on the year. The benchmark was about -20, so we were reasonably happy with flat earnings. But the portfolio was up 24%. So we saw a lot of multiple expansion on flat earnings. We don't think that can continue. We think valuations have moved up to be, fair, even slightly expensive. But the reality is, against things like bonds, they still look reasonable value. So from here, what matters is the earnings come through to justify those valuations. And for us, that's absolutely critical. And we think that will happen. But from here, there's no more multiple expansion, so it has to be about the earnings. But of course, in 22, earnings are going to be very robust indeed.
Are they? And this is the nub of the debate, it seems to me, at the moment, Mark, because the current data is confusing. Some of the macro is looking weaker than it should be on the basis of a big jump in earnings growth powered by monetary and fiscal policy here. I mean, for example, why is the Citi Economic Surprises Index almost turned negative in the States if the consumer is going to continue going out and spending the government largesse?
So investors are looking at earnings, and particularly looking at earnings expectations. And as you know, earnings expectations at the moment have been going up very, very substantially. And in this quarter, the second quarter of 2021, you're going to see an absolute peak in earnings expectations increases. And the question you ask is the right one. What happens then? So we are going to see very strong earnings this quarter, and that's going to be across the board, particularly in the United States. Europe, obviously, because the reopening being a bit slower, is a bit behind, but it will get there. Asia is already moving ahead in some places, particularly including China, very nicely. So we know there is going to be a very robust earnings number for Q2 when they get reported in August of this year. But that, in terms of the delta, the rate of change, is as good as it gets. And after that, your point is correct. What happens then? And so what we're seeing is a very strong recovery in earnings that's happening this year. That's going to give you some ground for why the market went up last year. But I think investors really into the third and fourth quarter this year have to ask the question, what happens in 22? What happens when we're lapping the stimulus programs? If we're right about inflation being transitory, as has been suggested earlier in the program, then you're not going to have some of those price rises that will help some companies going forward as well. So that's where you need to come back and ask the question of the companies that you're invested in, the businesses you think are going to be moving your portfolio value upwards. It's going to be about profitability and earnings continuing to grow at that time. And that's going to be a much harder question to answer.
Mark, funnily enough, I had been pondering the outlook for some of the big tech companies in 2022. I mean, this year's a tough one as we talk about comparables from last year. But, the big FAANG companies, big platforms are all trying to grow their businesses in different areas. I mean, e-commerce is one, for instance, the likes of Facebook and Twitter are going after, and they're not sort of effectively just sitting back looking at current business models. Do you think they're doing enough to ensure earnings are protected in 2022, given how gigantic some of these businesses are? So it takes a lot to try and move the revenue these days.
So I think those companies are always trying to move the needle forward. They do not sit on their laurels. I think it was Steve Bezos who said, it's never day two, it's only ever day one. We need to reinvent our business every single day. And that's something they've consistently done. We think they're going to continue to do that. And actually, as you know, those companies have not been driving the market in the last 6 months. There was a rotation away from some of those higher growth businesses into more cyclicals. And that's entirely reasonable given where we were with regard to an economic recovery from recession. But going forward into 22, I think investors will look at that area and say, you know what, there is resilient growth there. It may not be as fast as it was, but neither is the valuation as expensive as it used to be. So an Amazon or a Facebook, I think, can move things forward. And as companies are looking to continue to move their businesses forward, if there's not the stimulus anymore, then you have to do it yourself. So what do? You invest in digital technology. You try and take your business's IT onto the cloud. That's good for an Amazon. You advertise more. maybe use a Facebook or an Instagram. Those are the sort of things I think will be resilient going into 22.